Hi everyone, Happy New Year and welcome back to 10 out of 10. On today's segment of Money Mondays with Donna, I will be giving you guys 3 financial tips that you guys can start doing in 2021 to help bring you one step closer to being financially independent. Some of the things that I will be talking about today are some things that I have already done in the previous, and some of these are new to me that I plan on starting this year or in the process of already starting them. So let's get to it. Now, this is just a quick reminder that I am not a financial advisor nor am I a professional of some sort. I'm just simply here to share with you guys my journey to being financially literate. So the first financial tip that I recommend is to have 3 specific savings accounts. 2 of these accounts are tax advantage accounts, meaning they are either tax exempt or tax deferred. The first tax advantage account that I'll be talking about is the TFSA, that is tax-free savings account. So for this account, you're eligible to get it once you turn 18. If you don't know what that is, it's basically a savings account that allows you to set money aside in eligible investments and have it just grow over time. So the appealing part to this account is that you can withdraw at any time and you don't have to pay taxes on them. However, the catch on this is that there's actually an annual contribution limit. The limit does vary year to year, but if you don't use the full limit that you were given, it does get carried over to the next year. If at any given time you decided to withdraw money from this account, you do regain that contribution room that you've removed. But be careful not to go over your contribution limit, otherwise you're going to have to pay a small penalty. The second tax advantage account is an RRSP, short form for Registered Retirement Savings Plan. For this account, it's actually a tax-deferred savings account. This allows you to contribute money and you receive a tax deduction for the year that you contributed. To simplify this, you deposit money and then you get money from the government. This all depends on how much you contribute. This account exists to help encourage Canadians to save for their retirement. However, when you do decide to withdraw money from this account, you will have to pay a tax based on how much you've withdrawn. Just like the TFSA, this account also has a contribution limit. However, the difference between this and a TFSA is that for the RRSP is once you withdraw that money, you do not regain that contribution limit back. Now, the banks will tell you that you can use this when you decide to purchase your first home. But honestly, my suggestion for this is to just use this account for what it was made for, to save for your retirement and for your retirement alone. The other savings account that you should have is an emergency fund. Now, if 2020 has taught me anything, it is to be prepared. Anything can happen, like a loss of employment, reduction of income, or sickness, so it's always best to just be prepared. An emergency fund is essentially a stash of money that you save away just for, those rainy days. And it's kind of just like a financial safety net. Now you might be thinking, if I have my TFSA and I have my RRSP, then why do I need an emergency fund? I can just take money from those 2. So let's put it into a quick perspective. Let's say for your TFSA, you decide to buy a house and you use it for your down payment. Now you're down to maybe a couple $1,000s. And then all of a sudden, something happens where you require more money. Now, the only savings account that you have right now is your RRSP, which you were saving for retirement. So now you'll be forced to dig into that because you don't have an emergency fund ready. So it's always good to just have that safety net ready just in case. You don't have to use it. And at the end of the day, if you never even need it, at least you have that extra money. So for this account, there are a lot of ways that you can do this. One of them that's the most common is to just have a high interest savings account. Different banks offer different savings plans or different high interest savings plans. Do your research just to make sure you find the one that best fits for you. Now, you can always also just take it old school and just have a stash of money on the side in cash, but that money is not going to grow over time depending on how long you keep it in there. So just be mindful for that. The suggested amount that you should have in your emergency fund or should aim to get at is to just have 6 months worth of expenses. Now, you can do more, you can do less. It's really up to you. It's based on, your current situation. But overall, just saving your money could just save your life. The second financial tip is to find ways to make more money. There are 2 simple ways that you can do this. One that requires little to no effort, and the other one will take a little bit more time. The first thing that you can do is just by seeing if your employer offers a contribution match to your RRSP. So depending on how much you want to invest, your employer will match that. So that means if I choose to invest $1, my employer would match that and also invest $1. So just remember that there is a limit to your RRSP. I forgot to mention that if you're unsure what your limit is, you can always go on the Canada Revenue Agency website, log into your profile, and you'll be able to see your contribution limit for both your RRSP and your TFSA. But anyways, the amount will vary depending on your company. So, just do your research and ask. So another way to get free money is by making your money make money for you. So you can do this with your bank. They offer multiple options just depending on your lifestyle and your risk factor, but you can also do this by yourself. So I talked about my stock portfolio in my last video, and this is what I do to invest. And honestly, it didn't take me that long to learn. I would probably say with determination and dedication, maybe a month, maybe even less. But once my portfolio was built, I stressed less and, just watched my portfolio grow. Just be mindful that this is a long-term game. So don't expect to receive $1,000 overnight. It will take some time. Now, this all depends, again, based on your risk factor, what type of portfolio you have, and what kind of investor you are. If you guys do choose to invest, I use the platform Wealth Simple. Not sponsored, but if you use my code below, you and I will both receive $10 when you trade your first $100 worth of stocks. You can also make money, not free money, but make money by exploring and starting side hustles. Yes, shout out to all the small businesses out there and the new businesses as well. So be on the lookout for Tina's future videos. She will be posting a small business shout out, so keep an eye out for that. But if you're anything like me, not creative, not artsy, know that selling product is not the only side hustle out there. If you're good at something or knowledgeable in a certain subject, you can sell that or be of service to someone. Be the service that someone is looking for. Now, there's so many options out there, but if you don't know what's the best for you, then just try things out. And if you don't like it, just move on to the next. At the end of the day, you can just take it as a learning experience. The only way to make more money is to make sure that you have multiple sources of income, that you just don't rely on that one full-time job to get you through. Now, I can tell you all these little things to do to help you become financially free, but the most important financial tip that I can give you guys is to invest in yourself, being productive and motivated. So, set your goals annually, monthly, weekly, daily. And, just ask yourself, what do you want to achieve? Why do you want to achieve it? What do you need to do to get there? Make sure that why is strong enough, because that why is going to be your motivation. When you ask yourself, what do you need to do to get there? Give yourself timelines and be accountable for yourself. If it's hard to be accountable for yourself, which I completely understand, then, share your goals with a loved one, a parent, sibling, friend, anybody that you think can help encourage you to stay motivated and to be accountable for you so that they can help you achieve those goals. Organize yourself so that you can use your time to be the most productive. And you guys can actually take a look at one of our future videos that will be done by Mary Therese on how to be productive and make the most out of your day. So hit that notification bell so you know when we post a new video. Anyways, there will be times where you will need to spend money to achieve your goals. Whether that be taking courses, spending for your small business, or buying products to help you become more productive. Don't be afraid to spend money if it's going to help you out in the long run. At the end of the day, whatever path you choose to take, do what makes you happy. Don't forget to take a break every now and then and just relax and enjoy life. And before we get caught up on all of our financial goals, every now and then, just allow yourself to give back and pay it forward. The world and everyone in it right now needs a lot of love, especially during these times. No matter what you do, a little act of kindness does go a long way. That's it for me today, guys. Thank you for tuning in to 10 out of 10's Money Mondays. And as always, give us a thumbs up if you enjoyed this video. And if you haven't already, hit that subscribe button and comment down below some of your favorite financial tips. We also have a channel form that is in the description, and it's just a way for you guys to suggest any videos for us, any videos that you want to see either from me or from any of the other 10 out of 10 ladies, or even collab videos. I just wanted to end off by saying I hope that this upcoming year brings you guys good health and great wealth and blessings on blessings on blessings, and just manifest that. And we're out. Bye guys.